Hello everyone and Happy New Year. I had actually planned on doing this video much earlier towards the end of last year, but unfortunately right around Thanksgiving I caught COVID and was pretty much out of commission for several weeks. Thankfully, I'm all better now. My health is back and I'm kind of ready to get back into the swing of things. So I wanted to give everyone an update on the stock picking game with my two kids, Haley and Ethan. Let's get into it. Hello and welcome to another video from One Up Financial. I am your host, Eric Persagna, here to help you increase income, reduce taxes, and invest smarter in retirement. Before I get started, let's do a quick recap on the stock picking game. So if you recall last year, what I had my two kids do, Haley and Ethan, was each pick a set of stocks that they could invest in, and then the winner, meaning the person or the child who had the best total return by the end of December 20th. So total return is dividends because they just invested in stocks, as well as appreciation in the investment. So whatever contestant had the best total return at the end of that time period, as of December 20th, would be allowed to take their profits to spend on whatever they wanted for Christmas. First up, let's look at Haley's investment. So if you recall, she had initially picked,
I'm gonna pick Lululemon, Apple, and Amazon.
Later, what we found is that Lululemon stock was trading at over $300 at the time. And additionally, it was not available for fractional trading. Let's take a look at the results. So we have a current market value of $284.96, which represents a total return of right around 14%, which isn't too bad considering it was under a year that we were tracking that performance, and certain tech stocks actually did not perform nearly as well as the overall market did in 2021. So not a bad return actually, 14% I think in roughly 9 months. So definitely something that she should be proud of. Lastly, let's look at our final contestant, Ethan. His two stock picks were
Apple and Tesla.
Let's take a look at the results. Thanks almost entirely to a late year spike in Tesla, Ethan's portfolio's value as of December 20th is $286, representing a total return of 14.4%. So he literally beat Haley's portfolio by $1.04. I never in a million years thought it would be that close, but here we are. So Ethan is the winner and he is allowed to spend that additional $36, $286 minus initial basis or principal of $250. So he is now allowed to spend that $36 on whatever he wants. Now, I have to be honest about this entire process, this game. There was very little engagement from Haley and Ethan throughout the past year, which was kind of disappointing to me initially, but I thought about it a little bit more and I came away with 3 big takeaways from this game that I wanted to share that I think are actually applicable to any investor regardless of their age. So number 1, my first takeaway from this game is to put your money where your mouth is. If you want to know the truth, I had to constantly remind my kids that we were actually playing a stock picking game and that they had $250 each to invest in the market. They just simply didn't care. So whether it was an Apple earnings release or Elon Musk said something ridiculous in the news and Tesla stock popped by 10%, it really didn't matter. And that is really my fault. That is not their fault. And it's my fault because I made the mistake of putting my money on the line. I invested my money for them. And when it's not your hard-earned money on the line, the stakes aren't nearly as high. So really, I think that's important. If your money is not on the line and someone else is, then all bets are off. So in 2022, I really would like to continue the stock picking game, but this time I am going to educate them a little bit better on investing and then look at the amount of money they have saved that's just sitting in cash and try and get them to invest some of their own money, some of the money they receive from birthdays or Christmas or whatever it is, to get their own money at work and then see how they react. Because when it's your own money being invested in the market and there's risk and reward, it's a little different than when it's someone else's. Number 2, dollar returns are more meaningful than percentages. So most would consider a 14 or 14.5% return in around 9 months pretty good success, right? That's not a bad return on your investment. That is until you realize that your measly profit of $36 can barely buy the video game that you really wanted. Consumer spending drives 70% of our economy. And like all consumers, my kids shop using dollars, not percentages. So think about that relating to investing and risk. If I told you that the maximum drawdown in any given year in your portfolio is 35%, how would that make you feel? What if instead of the 35%, I said that your investments, your life savings, could drop over $600,000? Which statement resonates with you more? Most people, including Haley and Ethan, operate in terms of dollars, not percentages. And speaking in terms of dollars is more effective, especially when talking about someone's risk tolerance or how much they want to have in stocks versus bonds when they're investing in retirement. Additionally, I think it's important to note too, and I need to explain this better to my kids, that compounding interest is great. It works incredibly well, but it does take a lot of time and it takes a lot of money to be effective and actually have a meaningful impact on someone's financial situation. And had I positioned this to my kids earlier on in the game, they may have been more willing to put up some of their own money to potentially increase their return in dollars. Number 3, my last big takeaway is the goal of this game, the goal of winning, is a fun goal, but it's slightly misguided, and I'll explain kind of what I mean by that. Ethan has already started bragging about all of the things that he's going to buy with his money, even though it's $36. And that really wasn't what I intended to happen with this game, but I mean, they are a brother and sister, and competing for money, so I guess I should have seen that coming. What if instead of awarding the winner cash or money to spend on things, I made the prize something that they really care about or actually assign importance to? For example, I could have said, hey, the winner of this game, or the person who takes their time to really understand investments and performs the best in their portfolio, will get to have a sleepover 2 nights in a row and have unlimited amount of candy that they can take with them. Or having them choose where we go out to eat for breakfast, lunch, and dinner for a whole single day. They can pick wherever they want to go out to eat. Or I know they would love this one, taking them out of school for a sick day and going to like a baseball game or a movie or something like that. I really think that had I aligned the reward at the end of this game, they would have been more engaged throughout the process. And think about that too as it pertains to your own retirement. If your goal is just to win or beat the market or just have more money, it's likely that you're going to be rewarded with disappointment at the end of the day, even if you come out ahead. Instead, think about the things that bring you joy and fulfillment, whether that's vacationing, with your family several times a year, or something as simple as waking up and doing absolutely what you want to do when you want to do it without having to worry about what's going on in the stock market. Or maybe it's funding your grandchildren's new startup business. Whatever it is, really, I think it's important, and I kind of draw parallels to the stock picking game with my kids to clients that I work with in retirement. So align your money and your wealth with meaningful goals, things that are really important to you. And that'll help you focus less on the short-term performance in the stock market or the ups and downs, especially that we've seen most recently, and focus more on things that truly matter to you. Thanks as always for watching our videos. If you're interested in staying up to date with our market and financial commentary, please subscribe to our blog at oneupfinancial.com/blog or follow us on LinkedIn and Facebook. Thanks again, Happy New Year, and we'll see you in the next one.